Okay, guys. Yeah, welcome to my wisdom. This is the online wiz as usual. I want to show you the working of the orb, the ORB, Open Range Breakout. So, how does it work? The Open Range Breakout works during the open of the London session and the open of the New York session. We ride those big momentum moves. So, for the London, I usually use German 40 index because it's preferable that you use a European index, something like that. So that's what I usually do. For the US session, I use the US indices, especially specifically the Dow Jones, that is US 30. So I'll show you how the ORB works. So daily, what you have to do, you go to the 15-minute time frame. Yeah, there's our 15. We get our 15-minute time frame. Then let me do the back test for Monday. I want to show you a good one that so that you can know the both sides, what you can do when it does not enter ama isipoingia, what you have to do. So what you have to do at 10 a.m. that's when the London Open session, that's in Kenyan time, that's in East African time. So unaenda una identify the 10 o'clock candle. Where is that fucking candle? Upper. Yeah, after identifying that candle, you mark out the high and the low, as simple as that. You go back. Okay, let me first try now and highlight this zone so that I can know it when I come back to this lower time frame. Let me look for that which I marked in it. Now I can remove this rectangle of mine. It has been helpful. There you go. What you have to do after marking out the breakout and the zones, what you have to do, you'll have to identify an FVG. What is an FVG? An FVG is an imbalance created in the market when the market wants to make a big move, something like that. So you'll identify the FVG between the candles. That will be from the candle, the displacement candle. A displacement is a break above or below the range. Where's our displacement candle? This will be our displacement candle here. So what you have to do, you identify that fucking candle. You want to identify it. After marking out that candle, what you'll have to do next, you'll wait for a retest of the FVG, retest of the imbalance. Then it has to reject that FVG. So we have our FVG. Wait for the price to play. It will play out somewhere here, Cindy. After playing out there, that's a retest because it tried to go up, then it came and tested just a little bit. Then after that, you'll have to wait for a confirmation candle to show us that we are going towards that direction that we are going in it. After getting the confirmation candle, that's a bullish candle, a strong one with a good momentum. We'll wait and enter somewhere. That will be a long position. Utaingilia hapo because we'll have to wait for the candle to close, and after it has closed, you'll take your stop loss. You just put it slightly below the FVG. Then after doing that, remember this is a 5-minute time frame, so don't worry about that stop loss. As long as your account imeshiba, it's no pressure ban. Yeah, after doing that, what you have to do, you'll go to the higher time frame. Okay, let me reset. Yeah, so after doing that, you'll have to look for the overall bias of the day. So that's for Monday. The bias was bullish because you can see when we try to retrace, we try to track this stuff, how it's going. That's why we have our gap and something like that. You see that it's bullish. Nakuja hapo, we can retrace hapo, then we were somewhere here. So it's somehow bullish because it has not broken up below any candle. Let me remove that first. So if you know the bias is bullish, you'll have to target the previous day low. So how will you know where the previous day low? Because this was on a Monday, so we'll target the previous day high, not low. For long we go for the high, for short we go for the low. So what's the previous day high? The previous day high, let me try and check for the Friday. Go somewhere, yeah, somewhere there. That is the highest point. So if we target that is there, and we let it look like it's playing out, yeah, you can see our risk reward ratio of 7.09, 1 to 7.09. If you risk some good amount of capital, you get hit, and it's a good one. So you can see, though it hit on okay, this is August. Okay, no problem. This was yeah, you can see Mekujika hit. That's on, yeah, the hit up. You can see hit up with you, which is totally fine. And according to our strategy, did not hit any point below the area where we entered. So that was a clean trade. You can adjust while trading. You put the stop loss to break even and let it play out. As simple as that. That is the open range breakout. So you can use the same fucking thing for New York session. That is I used Dow Jones, that is US 30, and it's just a good one. And yeah, I recommend it. It's a good one. So you can try it, backtest, and do all those kind of shit. Then you'll see what's best for you. So it's not limited to that, by the way. You can do some adjustments, modifications, all that stuff. As usual, this is my wisdom. I am the online whiz. Yeah, let's meet in the next time when we have to meet, probably. Yeah.